What's going on, everybody? Liam O'Reilly, Vermont economic realtor. I hope you're doing well. Wanted to talk today about a couple different topics. Wanted to talk about what happens to the housing market if the Federal Reserve does pivot in the upcoming months here. Pivot meaning lowering their Fed funds rate for whatever reason they decide to do so. Basically, because they view that inflation is no longer a risk and they want to stimulate the economy. So what's going to happen with the housing market if that happens? In my opinion. And then also wanted to bring up this Redfin data set talking about the most competitive markets in the country. I was looking at this the other day. So you can see here, most competitive markets, right at the top of the list, Burlington, Vermont. I'm the Vermont economic realtor. I'm based out of Burlington. So I work in the most competitive market in the US, which is explains a lot. I mean, it really checks out with how intense things have been for a while now here in Vermont, and they still continue to be. They come up with this number based on four inputs: number of competing offers, waived contingencies, sale to list ratio, and number of days on market. So if you've heard me talk on this channel about different deals that I have going on, or what I'm seeing around the Burlington housing market, and it sounds different from the market that you're in, or surprising if you're thinking about moving to the Burlington area, really within an hour of Burlington is where I cover. That's probably that. I mean, that's the data showing why it is very competitive here. Still, there's a lot of buyers, not a lot of sellers. As I mentioned many times, what I also wanted to say about this is I got called out by a commenter maybe about a month ago for being biased, and it was mostly because I am a realtor, and so I do have biases that I guess I believe in the housing market, especially around Burlington, and being one of the most competitive housing markets in the country. It's very strong right now as far as supply versus demand, and I have a lot of faith in it. But something else I wanted to mention as far as my opinions on the overall economy, and I talk a lot about the national housing market or other markets across the country. And my opinions about other markets in the national housing market are based on my experiences. I mean, there's no way around it in the most competitive housing market in the country right now. So that could look very differently, and my opinions can be very different than if you're in Las Vegas or Austin, Texas, or one of these markets that's slowing down drastically. Or, I mean, if you're in another very competitive housing market, this will probably translate nicely. Obviously, if you're looking around the Burlington area, in my opinion, this is some of the best information that you can get. This channel is designed to be a great resource for you. So bouncing off of that point into the Federal Reserve, kind of with that disclaimer, what do I think will happen if the Federal Reserve decides to pivot in 2023? Pivot meaning drop the Fed funds rate significantly, which they do because there's something wrong with the economy. We've kind of speculated on what that could be, talked about some of the debt markets that are going on, and consumer spending, what would cause inflation to decrease or deflation to occur to the point where the Federal Reserve would want to pivot pretty drastically. I think in competitive markets like Burlington, I think prices will continue to go up and start to skyrocket again, because right now there's still far too many buyers than there are homes to be purchased, or condos, really just properties around the area in Burlington, and I'm sure in other competitive markets across the country. So when interest rates drop in a scenario like that, um, because of economic hardship, right? This would be because people don't have enough money to spend, which is obviously going to hurt some buyer pool. But in a market where supply and demand are so imbalanced, then I think I think at least around here, there's enough buyers that will take advantage of these low rates because they're well positioned financially and are won't be hurt as badly by a recession as people who aren't as qualified. And I've talked about this a little bit in other videos, but most of the people buying homes, at least around here, are people that are well qualified. There's not a lot of people purchasing homes with low down payments or FHA financing, for example, because there's too much competition and there's too much money floating around the area chasing too few goods, causing prices to go up, causing the market to be competitive. And in my opinion, a strong place or a market that will continue to see appreciation, especially if the Fed pivots and mortgage rates drop. Now, if you are in another market, obviously a less competitive market that has a lot of supply, something like Vegas, that obviously I don't work in Vegas, but from what I've read um, online, that is seeing drastic increases to supply, and where supply is starting to outweigh demand in those markets. There's probably a good amount of activity in those markets. A good amount of the home buyers are people who are on the lower end of the spectrum, who are maybe FHA buyers putting 3.5% down, or putting 0% down with a VA product or USDA or something like that, and don't necessarily have the savings or the finances to withstand a strong recession or something that will cause, that will be the reason why the Fed pivots. I think in those markets where supply is already outweighing demand, you could see, I think there's the chance that prices could continue to come down. I mean, in my mind, that just logically makes sense, even though affordability will become better by lower mortgage rates. The buyer pool will also shrink because a good portion of the people who would want to buy can no longer afford to, whether, because they need to spend their money on their what they need to survive, food, energy, etc., or maybe they lost their job, something like that. So I think that's a fairly likely scenario in some of those markets that have more supply. Here in Vermont, and again, I paired these two topics together because I wanted to preface that um, that I am biased, especially in regards to the national housing market. But I think it's so competitive here still in terms of what Redfin said, and we'll go back to the article one more time at the end here. In terms of number of competing offers per property, waived contingencies, sale to list ratio, and number of days on market. I'm assuming the sale to list ratio is the price, and number of days on market. I mean, solid listings are still selling fast. Inventory is still very low around here, and if something happens that causes the Fed to drop their rates, then I could see prices taking off again. So anyway, Liam O'Reilly, Vermont economic realtor. If you're looking for a home here in Vermont, I would be happy to help you out. I'm currently in the market here in Vermont, so you'll be shopping along with me. I'm not going to compete with you on a home if we're if we're looking for the same thing and you want it, it's yours. If you work with me, that is. If you are looking to buy or sell a home here in somewhere else besides Vermont, let me know. I'd be happy to help you. Happy to connect you with a realtor who knows what they're doing, so you're not stuck with somebody who who doesn't know how to help you. Other than that, let me know what you think. Leave a comment in the description, and I'll see you guys in the next video.